Are you looking to get started in multifamily real estate investing? If you are, this video is going to cover all the basics you need to know about multifamily real estate. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 13-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and I'm also the author of the real estate book, Sell for More. So let's get right into it and talk about multifamily investing for beginners. And first of all, let's talk about some definitions because multifamily can mean a couple different things. And when we talk about multifamily, we're really talking about apartments or apartment buildings. So let's just say apartments right here. Now, if you're talking with one person and they're saying multifamily, they mean apartments on a bigger scale. Another person might mean multifamily on a smaller scale. So we've got some smaller multifamily buildings. Some smaller multifamily buildings, and these could be a 10-unit property. This could be a 25-unit building. It could be even a 50-unit building. These tend to be on the smaller side. And on the larger side, we typically come across something called institutional and non-institutional. Generally speaking, if you have 100 units or more, you're going to be considered an institutional grade investment or a grade property. Anything under 100 units would be non-institutional. If you're talking about multifamily or apartment buildings with somebody and they're saying that, yeah, I just purchased an institutional quality or institutional grade building, they're going to be talking about something, generally speaking, 100 units and up. If you're talking about non-institutional, you're going to be under that 100 unit mark. And if you're talking about smaller multifamily properties, you're in that 10, 25, anything really under that 50 unit mark. So let's talk about why somebody would be interested in multifamily in the first place, because there are quite a few advantages to multifamily over doing single family homes, which is how I started investing in real estate a long time ago. So what are some advantages? Well, number one, we have a different way of valuing the property. So valuation. How we value a residential property is called the comparable approach, and where if a couple other properties, similar ones on the street, sell for the same amount, well, your house is worth what the other one sold for. That's the comparable approach. With multifamily, we use something called the income approach, where the property is based upon the NOI, the net operating income the property produces. So if you raise the net operating income and you lower the expenses, well, you've just significantly increased the value of your property. And this gives you a lot more control over the valuation of the property rather than the control you would have using the comparable approach, where you're basically at the mercy of the comparables. So I'll put a link right up here to a video I did explaining all about the income approach. With this video, we're just covering the basics. That video goes more in depth about the valuation methods using the income approach. So valuation is number one. The second reason why somebody would be interested in getting into multifamily real estate is the financing. Now, if you've bought a home yourself, a residential property, you will know that the lender wants everything about you. They want your firstborn child. They probably want your left leg and maybe even your right foot, and you wouldn't even be able to walk after that point. The lender wants everything. The reason why is with residential property, the buck stops with you. So if you stop paying the mortgage, if you go into default, well, the lender is going to come after you specifically and all of your assets to make the lender whole. With multifamily, it's a lot different. So we have something called recourse and non-recourse debt. And I'll put a link right up in the corner here to a video I did explaining all about recourse and non-recourse debt. Basically, it means that with non-recourse debt, the bank does not have recourse to come after you individually. They will take the asset in the event of a default, but they won't come after you and take the rest of your assets. This is a huge advantage to commercial multifamily, the larger multifamily properties. And then we have some really interesting terms that we get that we don't really see with residential properties. So we have interest only. Interest only periods means that we're not paying the principal down on the mortgage payment, we're just paying the interest. This has the added benefit of improving and increasing our cash flow, which then allows us to do some more work to the property, raising the NOI, which means we're decreasing the expenses, raising the gross rent, probably compressing the cap rates as well. And now that I mentioned cap rates, I'll put the link right up here to the video I did explaining all about cap rates, because that is a huge part of multifamily and commercial real estate in general. So we've got recourse, non-recourse debt, huge advantage. Interest-only periods in a mortgage or with the loan, huge advantage. And the third advantage I would say when it comes to financing is the lender looks at the property first. So I've been using the example of you buying a residential property, your home. The lender looked at you first. Can you really shoulder the burden of the loan, all the debt service obligations? Well, with multifamily, the lender looks at the property first because you're really buying a business, and the business just happens to be attached to real estate. So the lender will look at the business first. Can the property itself support the debt payments, the debt service? And then they will look at you as a person guaranteeing, the guarantor of the loan second. So again, three huge advantages for real estate investors getting into multifamily real estate. And number three is scale. When I was back in my single family home investing days, I worked out how many houses I would have to own before I hit my real estate investing goal. And it was like 1,000 houses. That is crazy. Can you imagine dealing with 1,000 different tax bills? That is insane. With multifamily, it's really easy to scale up because we have so many units in one place. We have one property manager that could be managing 50, 75, 100, 200, 300, 400 units all at the same time with one property. This makes it tremendously more efficient to do. Plus, with scale, we have something called the economies of scale. So our expenses, our cost per unit goes down. When you're managing a single family home or a duplex or a triplex, the ratio of expenses and your gross or net rent per unit is certainly a lot higher. But with more units, we spread out the costs, we take advantage of the economies of scale, and we have much stronger cash flow. And cash flow is tremendously important because, like we said before, with how the properties are valued, the higher the NOI, the higher the value of the property, the more you can sell it for, the more debt you can put on the property. Huge advantages there. Plus, with more cash flow, we have more stability. So in downturns, in economic downturns, multifamily has outperformed all the other commercial real estate asset classes because, number one, people always need a place to live. Number two, we have the efficiencies, the economies of scale. And related to that, we have strong cash flows. So multifamily in the past couple of recessions, it's experienced the lowest time in downturns, and then it's surpassed the previous peak faster than all the other commercial asset classes put together. So huge advantages with scale, huge advantages with financing, and huge advantages with valuation. And now we're going to move on to how you can actually acquire or purchase or invest in multifamily properties. And if you are interested in learning more and getting started with multifamily, check out the Multifamily Conference. It's happening May 14th and 15th, 2022, live in person in Toronto. Get your tickets now. It's going to be an awesome event. We have Kevin O'Leary talking about raising capital. We've got Rod Cleef coming in specific to growing a multifamily portfolio. We have Richard Wilson about raising capital, Joel Block structuring, Pierre Paul Turgeon for underwriting. All sorts of great experts are coming to Toronto, so definitely check it out, multifamilyconference.ca. So when it comes to buying or investing in multifamily, you really have four options. So 1, 2, 3, 4. Option number one, you can buy it yourself. Now, obviously, if you're buying a larger property, you might need $10 million for the equity needed to complete the transaction. You'll probably need the track record, so the seller actually wants to sell to you. You'll also need the track record in the broker relationships to even have a shot at winning the deal. Then when you go to get financing, you have to prove to the lender that you can actually run the property. If you don't have a track record, the lender's probably going to be pretty skeptical. All these things make buying it yourself pretty challenging if you're a newcomer to the multifamily space. The way you can get around that, though, is option number two is you can partner. You can form a partnership with maybe one one other person, two other people, three other people, four other people, where you're all active in the deal, you're all active in the partnership, contributing something different to the relationship. So maybe one person's bringing the capital, or two people are bringing the capital, a third person's bringing the management experience, a fourth person maybe finds the deal itself. Our partnership can work really well. The key thing to keep in mind here is, though, that everybody is considered to be active. So everybody is on the hook. So a common misconception is that, oh, well, I'm just bringing capital into the partnership. I have all these protections. That's not true in a partnership setup. Everybody is on the hook equally. So this is why option number 3 and option number 4 become very attractive to people who are earning a high income, doing what they do best day to day, but they will actually want to put their money in an extremely strong vehicle such as multifamily that's producing solid returns and has great stability, plus all these added tax benefits. So option number 3 is you can invest in a syndication. Now, real quick, because I've done videos before, and I'll put a link right up here to a video I did explaining all about syndications. But syndications allow an investor to invest their capital passively in the deal. So they're just bringing their money into the mix, and their money is used to acquire and improve the property, and the whole project is run by an experienced management team who has the track record, who has the experience, who has the deal flow, all of those things that are necessary to successfully acquire and improve a multifamily asset. So syndication is a great option. And option number 4 is a real estate fund, which is somewhat similar to a real estate syndication. And I'll put a link up here to a fun video I did talking all about real estate funds. And a fund is very similar to a syndication in that, yes, you're passive in the investment if you're just bringing the capital, but the difference with a fund is that the fund has a life of its own, and it will acquire and divest or sell many different properties over the life of the fund. So your money is more diversified. With the syndication, you have more control because it's on a deal-by-deal basis. So you can really say, yes, I like this property, I'll invest, no, I won't. With the fund, you say yes or no to the fund criteria, and then the fund then goes out and deploys the money to earn a good return per the fund criteria. So these are the 4 ways you can actually acquire a multifamily property. So right now we've already learned what multifamily property is. We've learned all the benefits of it. And then we've actually learned how you can go out and acquire or invest in multifamily properties. So if you are somebody interested in learning more about multifamily real estate, join my free Facebook group. Link is right down below. Great group of people. And if you like this video, if you found this useful, hit the like button, leave a comment, let me know what you think. It really helps out the channel. And until next time, happy investing.